More on the big market story of the day, the expected IPO for internet game maker Zynga. We did just see, remember, that debut of LinkedIn, then Yandex going public. Now we're still waiting for Facebook and many other social media sites to follow. Why this sudden rush to go public? Josh Bernoff is the Senior Vice President of Idea Development with Forrester Research. He specializes in social computing and social marketing. Josh, welcome to InBusiness. I mean, for so long, we've been talking to VC guys, we've been talking to these companies and hearing from them, we don't need to go public, we can wait, we can raise capital in Silicon Valley. There's just no pressure. Why did that change in the past 2 weeks?
Well, I think the reason it's changed is that, first of all, the markets are now open to this sort of thing. The other thing is that they have solid track records now. They're actually able to show profits, growth, increases in revenue, and by being public, it's a lot easier for them to reward the employees that have stock in the company.
But with Zynga, this is the first. I mean, we've seen the first social media with LinkedIn go public. Now we're looking at possibly the first social gaming site to go public. What do you expect in terms of interest in Zynga?
Oh, I think the interest in Zynga is likely to be very strong, just as the interest in LinkedIn was. I mean, if you look at it, we have seen a big growth happening in the number of people who use these applications. At this point, over 80% of the online population in the U.S. is using social sites in one way or another, and a huge growth in the amount of time that they spend on these sites. The monetization is coming along pretty well, and as a result, this is really an area, probably the most exciting area in the internet as far as ways of generating revenue.
I mean, obviously the giants that we're waiting for, Twitter and Facebook here to debut, but Zynga is a program that builds off of the Facebook platform. Is there, you know, some sort of proxy there for what we can expect for Facebook with evaluations, since we're looking at the debut of a company that relies on it for use every day?
I think you have to evaluate Zynga and Facebook separately. Zynga's exciting because of the amount of time and energy that people put into the gaming. It has a unique hold on people, plus a unique business model that's associated with people actually buying these virtual goods. Facebook, the prospects for Facebook are mostly based on how well they can monetize to marketers and how well they can grow internationally. Both things that are probably going to be a whole lot more value than you've got in Zynga, but is going to have to get evaluated pretty much separately.
Where's Zynga going to get most of its revenue from?
Zynga specifically, I think, is in a position to get revenue from a lot of places, and that's part of the reason that it's exciting. Certainly they have the ability to sell virtual goods. They have the ability to connect up these games to what commercial people want, like a retailer or a product company. Basically, if you can get people to spend time with an application, you're going to be able to find ways to monetize it, and there's hardly anything people are more excited about than spending time on these games in these social networks.
Who's their core consumer, though? I mean, it would seem a virtual good on a game that you play online. For those who lived through the 90s, you know, the defense of the valuations we're seeing now is, hey, we've got companies that actually have revenue. It's not just an idea. But we're talking about a company based on a virtual concept. Do you know what I'm trying to get at here? It just seems that explaining to your average everyday investor exactly what it is that this company does is a little bit more challenging for financial advisors.
Yeah, and I think that's really the challenge here. If you look at all of the excitement that's happening around all of these social companies, it's just people want a piece of this social phenomenon, and a lot of it has come unmoored from the actual prospects for these companies. The things that investors should look at is where's the growth, that is, how many people are going to be using this, and in the case of Zynga, it's got a pretty universal appeal for people who like to play games. That's a pretty broad cross-section. Second, how much time do people spend on there? And then the third most important thing is what are the ways they have to monetize? And you can actually look at the revenue statements and get an idea of how that's coming along.
All right, Josh Bernoff, Forrester Research, thanks so much for joining us, giving us your insight.